All right, cool. Um, great. Here's the weekly state of Credmark. So the bear market continues, but it's weirder now. Um, so Matthias, you want to comment on a little bit of this?
Yeah, I mean, Celsius was last time already our topic. Now we have Three Arrows Capital as well joining the show. Um,
Welcome, Three Arrows
welcome,
Capital.
welcome, and yeah, I mean, it's still unfolding, right? So there's a lot, I think, in the back that they are trying to work out something. I heard that FTX might step in at the one or the other. Um, for the one or the other, maybe, yeah, buying them out, or I'm not sure how this unfolds. But we will see. And in terms of the stable coins, it was interesting, especially on the weekend where we had this big dump on Bitcoin as well. That the mentioned stable coins, so USDD and USDN, and as well MIM, lost all their peg and fell to 90 cents or 88 cents, but they are slightly recovering at the moment. So for me also will be interesting to see how this goes the
Yeah.
next days. Um, yeah, and staked ether remains still heavily discounted, right? So there is nothing there, but I guess this is still the Celsius situation. So they need to find a solution how to either sell these ETH or get bailed out other way.
Yep. Okay. Yeah. So I think that staked ETH is going to just continue to trade at a discount now that people are like, oh yeah, liquidity is not just a one-to-one thing, even with you know, that's what you're paying for. You're paying for the illiquidity of it. That's what you get the discount for. So, anyways, tell us a little bit about synthetics.
Yeah, so synthetics was really I had them not on the radar for a long time, and then the SNX token jumped nearly 100% during the weekend. Now still up 75%, and the reason for this is again they made a bold move because normally you can mint these synthetic token kind of things. The synth they call it, right? This are some synthetic version of ETH and other stuff. Or I mean, they have, I think they have stocks as well. And then they, as investors, requested token instead of these synthetic stuff. They had an agreement with Curve that they launched these pools where you can exchange your I'm not sure how it's called, your thin ETH against normal ETH, and the same with Bitcoin and USD. And this really got through the roof. They had so many trading fees because a lot of investors were trading their token on Curve with these pools now. So I think they are now just behind Uniswap in terms of trading fees over the last days. And
Wow.
as you need SNX to trade these token or these synth, the token price as well skyrocket. Um,
Wow.
and the most interesting stuff is that they are currently they offer the highest bribes on Votium to get people vote their V curve token on the SUSD curve pool. So they heavily try to attract liquidity, and they're bribing people to do so.
Wow. All right. So we're back. We're back in the curve wars are happening again.
New competitor in the curve wars. Yeah.
I never would have expected this right now. That is crazy to me. But here we go.
That's good
Synthetics.
though. See? That's good. Like people are opportunistic again.
Yeah, it's I don't know that it's good. I think we have a lot more leverage to shake out of the market before this happens again. But and I think that it's a very dangerous time to be playing this game for synthetics. But if they've got the war chest for it, then they can potentially do it. Um, but that's pretty optimistic that this that that people are going to wrap up their standard tokens. It's pretty optimistic that, especially with Steth at a discount, to think that the contagion of people not understanding liquidity and wrapping is going to extend to their platform, or is going to not extend to their platform, is really, really strange to me. But apparently people like it. So people are looking for something new to do, I think. Yeah. So Synthetics is hot. Okay. So some operational updates. The Frax proposal. We are having a really hard time getting it across the quorum line, which is a surprise. So we have been working. We came up with a pretty in-depth proposal for all the different things that we could do for Frax. And when we presented it to the individuals who came to us, they suggested that we scale it back and have the initial proposal that is currently up on Frax be more exploratory. They wanted to use some of these terms, KPIs, to define these metrics, and we thought that was okay because we wanted to fit in with the existing Frax culture. But private conversations have shown that people like the idea of doing this type of thing, but they think that A, we potentially don't have the credibility to do it, and B, that that it's too expensive for just exploratory. And we knew this going into it, which is why we've already kind of done a bunch of the actual work on exploring the Frax protocol ahead of this proposal. But it's a little bit surprising to see that it's all about trying to get these whales in on this idea, and even some of the supportive investors of Frax don't have the weight that they need in order for us to reach quorum. So, yeah. So,
and Paul and I were wondering the other day, how do you get to quorum? There's like 7.8. How do you get to quorum?
You have to get people. You have to get 7.8 or 7.2, maybe. Maybe I wrote that wrong. Million FXS that has to be in the move forward with this category in order to move forward with a snapshot proposal. We have 24 hours to get essentially 6 to 7 million more FXS dedicated, but that's FXS is trading at, that's like $35 million worth of support that we need to get in there. So I'm not sure if that's going to happen, because you basically just need one, or I think there's 2 whales that can make that happen. And they're both, one of the core developers pushed back against Credmark's involvement. And so they listened to the core developer instead of the community managers, who are the people that we've been talking to. So we got a little bit of work to do there. And if this doesn't pass, I suggest we're kind of thinking of some alternatives to get across the finish line with this. But yeah, it has been surprisingly difficult, especially considering some people without the full context kind of commented on it in a negative way. So anyways, we are interviewing for tech and sales positions, even though we are currently not going to be taking on new people. This process always has a long lead time. That's the same as last week. We have no new partners this week, although the Frax stuff is up and going. We've been really focused on getting them across the line. Wiki entries. We had 1 new wiki entry, and it's about Frax. The Terra UST wiki entry still continues to be the highest performing of anything. And that's not surprising at all, because it still has a huge effect on the market. This week we had 6 model repository PRs, and they're mostly fixes and performance upgrades to get our terminal out, which is out today. We had 3 contributors on that this week. The API 20,639 API hits this week for an all-time of 2.04 million. VAR portfolio historical, which is coming from our terminal testing, is the most popular. The Jupyter notebooks are still up and running. I want to show everybody can you all see the terminal?
Yep.
Okay, cool.
Yes.
So we have the terminal, which we had last week as well. We've got all the same stuff. Sharp ratio takes a little while. But as you can see, this is much more performant. We are starting to see some changes in the liquidity that's available on the market. So some of the really standard DAI USDC liquidity has really risen. And yeah, Frax is actually doing a little bit better today than they were yesterday. Synthetics Frax has been closed. So as you can see, we also have the balance ratio on Curve. This has been the most interesting thing that I have seen. So Frax has actually largely recovered. Is MIM on here? MIM is doing worse than ever. When I tweeted out this weekend, it was about this downward trend. I do think that MIM is going to go the way of the dinosaur. But that's just a personal opinion. That is not financial advice. So yeah, and that is largely being driven by these balance ratios, which show us kind of the general health of these individual tokens. So as you can see, Frax is still incredibly healthy. They have a huge amount of liquidity. So, and the other big thing on here is, thank you, Vineet. We now have stake and unstake in the new terminal. So when I connect to my wallet, I can do things there. So that is all the new stuff on the state of Credmark. So I think moving forward, the important things are to get this terminal out the door, make sure that people are seeing it, see what people like about it, get some feedback on it, and continue going down that route. The next step on the kind of terminal side of things is to get wallet level analysis up. And the important thing on the partnership side is to figure out if Frax doesn't pass, kind of what went wrong, how we can avoid that in the future, and making sure that as we expand outward into these kind of partnerships that we're looking at doing in the short term, how we can get across the finish line faster with some of these partnerships, so that we can really dig in and do some of our core competency, which is monitoring the risk of these individual platforms. We've got VAR for everything. We've got Sharp ratio for everything. We've got liquidity coverage ratio. We've got the documentation on the methodologies. So there's really no reason that we can't get across the finish line on all this stuff. There's absolutely no reason we shouldn't be able to do that. So everybody, any questions? If there's no questions, then I will talk to you all, I'm sure, offline over the next few days. Cool. Talk to you later.